Buckle up because things are about to get interesting. The real estate market is always dynamic, but with Trump's policies in play, we could see significant shifts in how business is conducted. From urban development projects to suburban housing booms, the landscape is evolving rapidly. Some people love him, some people hate him. His presidency has been polarizing, to say the least. Supporters argue that his business acumen brings a fresh perspective to the White House, while critics worry about the long-term implications of his policies. The debate is fierce, and the stakes are high. But one thing is for sure, you can't ignore Donald Trump. His presence is felt in every corner of the real estate world, from the boardrooms of major corporations to the living rooms of everyday Americans. His decisions and policies are closely watched and analyzed, making him one of the most influential figures in the industry. And just like his personality, his presidency is having a big impact on the world of real estate. Market trends are shifting, new opportunities are emerging, and the rules of the game are being rewritten. Whether it's through tax reforms, deregulation, or infrastructure projects, Trump's influence is reshaping the landscape. Whether you're a seasoned investor or a first-time homebuyer, Trump's policies are likely to affect your bottom line. The changes in tax laws, interest rates, and housing regulations can have a profound impact on your financial decisions. Staying informed and adaptable is key to navigating this new era in real estate. So let's dive in and see what the future holds for real estate under the Trump administration. With so many variables at play, it's a fascinating time to be involved in the industry. Whether you're looking to buy, sell, or invest, understanding the current landscape and anticipating future trends will be crucial for success. Join us as we explore the impact of Trump's presidency on the real estate market and what it means for you. The Trump touch, from towers to tax breaks. Trump's background in real estate is no secret. He's built an empire on luxury buildings and high-stakes deals. Now, he's brought that same deal-making spirit to the Oval Office. One of the biggest game changers for the real estate industry is the Tax Cuts and Jobs Act of 2017. This law, championed by Trump, includes some sweet tax breaks for real estate investors. From bonus depreciation to lower tax rates, these changes are putting more money in the pockets of property owners. And when investors have more cash, they're more likely to reinvest in real estate. Deregulation, nation building boom or bust. Trump is all about cutting red tape and unleashing the power of the free market. And that means deregulation is a key part of his agenda. The Trump administration has rolled back regulations in a number of industries, including real estate. This move is designed to make it easier and cheaper for developers to build new properties. But is deregulation always a good thing? Some experts worry that it could lead to lower construction standards and risky lending practices. Only time will tell if deregulation will lead to a building boom or a bust. The economy's impact: riding the wave or bracing for impact. The economy plays a huge role in the health of the real estate market. When the economy is thriving, it creates a ripple effect that benefits various sectors, including real estate. People feel more confident in their financial stability and are more likely to invest in property, whether it's buying a new home or expanding their business premises. When the economy is strong, people have more money to spend on homes and businesses. This increased spending power leads to higher demand for real estate, driving up property values and encouraging new developments. Families can afford to move into better neighborhoods, and entrepreneurs can take the leap to open new stores or expand their existing businesses. Trump's policies, like tax cuts and deregulation, are aimed at boosting economic growth. By reducing the tax burden on individuals and businesses, the administration hopes to stimulate spending and investment. Deregulation is intended to make it easier for businesses to operate, potentially leading to job creation and further economic expansion. And so far, the economy has been doing well, with low unemployment and a strong stock market. These indicators suggest that the policies may be having the desired effect, at least in the short term. A robust stock market can increase wealth for investors, while low unemployment means more people have steady incomes, both of which can fuel the real estate market. But some economists worry that these gains could be short-lived. They caution that the current economic growth might not be sustainable in the long run. Factors such as rising national debt and potential overheating of the economy could pose significant risks. They argue that Trump's policies could lead to higher inflation and a trade war, which could hurt the economy and the real estate market. In the long run, higher inflation can erode purchasing power, making it more expensive for people to buy homes. A trade war could disrupt supply chains and increase costs for construction materials, slowing down real estate development. As we navigate these uncertain times, the question remains, are we riding the wave of economic growth, or should we brace for the impact of potential downturns? Kushner in France, a bridge too far. Charles Kushner. You might know him as Jared Kushner's father or as the guy who got a pardon from Trump. But he's also a real estate mogul in his own right. Trump recently announced his intention to appoint Kushner as the ambassador to France. But it's also piqued the interest of real estate investors. Could Kushner's appointment open doors for American investors in the European market? It's too early to say for sure, but it's definitely something to keep an eye on. Playing the trump card tips for real estate investors. In this section, we will delve into some crucial strategies that can help you navigate the ever-changing landscape of real estate investment, especially in the current political climate. So how can you navigate the real estate market in the Trump era? The real estate market is always evolving, and with the policies introduced during the Trump administration, there are new opportunities and challenges to consider. Understanding these changes can give you a significant edge. Here are a few tips to keep in mind. These tips are designed to help you make informed decisions, maximize your returns, and minimize risks. Whether you're a seasoned investor or just starting out, these strategies can be beneficial. Talk to your tax advisor. It's essential to stay updated with the latest tax laws and regulations. A knowledgeable tax advisor can help you navigate the complexities and ensure you're compliant while maximizing your benefits. The new tax laws are complex. They can be overwhelming, but understanding them is crucial for your investment strategy. Your tax advisor can break down these laws and help you understand how they impact your investments. Make sure you're taking advantage of all the deductions and benefits available to real estate investors. Look for opportunity zones. These zones offer significant tax incentives, and investing in them can lead to substantial financial benefits. The Trump administration has created opportunity zones in economically distressed areas. These zones are designed to spur economic growth and development, and they offer attractive tax incentives for investors willing to take the plunge. Investing in these zones could lead to some sweet tax breaks. Go global, maybe. Diversifying your investment portfolio by looking at international markets can also be a smart move. Different countries offer different opportunities and risks, so it's worth exploring. Kushner's appointment could create new opportunities for American investors in Europe. With political connections and new policies, there might be unique investment opportunities that weren't available before. Stay informed and be ready to pounce if the right deal comes along. The real estate market can change rapidly, and staying updated with the latest news and trends is crucial. Being prepared and having a strategy in place can help you seize opportunities as they arise. The future of real estate under construction. The real estate market is always changing, and the Trump presidency has thrown in some extra curveballs. There are both opportunities and risks on the horizon. The key is to stay informed, adapt to the changing landscape, and make smart decisions based on your individual circumstances. One thing's for sure, the real estate market under Trump is anything but boring and predictable. Donald Trump knows real estate. It's in his blood. Born into a family with a strong foundation in property development, Trump learned the ropes from his father, Fred Trump, a successful real estate developer in his own right. The Trump name has become synonymous with luxury, opulence, and towering skyscrapers that redefine city skylines. From his father's success to his own iconic towers, he's been a major player in the industry for decades. The Trump Organization has developed, owned, and managed some of the most prestigious properties in the world, including Trump Tower, Trump International Hotel, and numerous golf courses and resorts. His brand is built on a promise of quality and extravagance. Now, as president, his experience is shaping policies that directly impact the real estate market. His administration has pushed for deregulation, tax cuts, and incentives aimed at boosting the economy and, by extension, the real estate sector. These policies are designed to encourage investment, development, and growth, making it an exciting time for real estate professionals and investors alike.